Hello, all you crypto people, and we have some news for you. Arthur Hayes, the co founder of BitMEX, says crypto and Bitcoin and the entire economic market could go down by as much as 30% in a massive pullback in March. Now, this would fit the timeline of pre halving dump, because remember, the halving is happening in April. But why would this happen for the entire market? Well, he actually believes that there's going to be a pretty big dip for a crash among a vicious washout because it has to do with the banking failures yesterday. And there's a crucial program that will fund banks that will actually expire in March. He says this kind of washout will happen very quickly and we will recover very quickly. I do think if we do have a washout, it will recover very quickly, especially in crypto with the halving coming up. So there's a depletion of the Fed's reverse repo program or repurchase program that's going to run out and it's going to expire, and that might trouble banks. Remember, the high interest rates the banks don't like. But this might actually be a blessing in disguise for crypto because the thing is, like, this will force the Fed and that crafty Jerome Powell to actually lower the interest rates by a whole lot way before time. If there's a massive banking plunge, the Fed is going to get cold feet on these high interest rates and they're going to lower them in an emergency route, I think. And he says like Bitcoin could also plunge 20 to 30% in the route, but would quickly rebound. Now, if this happens, I think it actually benefits Bitcoin in the long term and even in the midterm, because if people lose trust in banks, they'll go to other mechanisms like Bitcoin. The interest rates coming down favors Bitcoin. The halving happening right afterwards favors Bitcoin. So we could see a plunge down. Let's say we're at 50,000. We could see a plunge down to maybe 35 and then shoot up to like 60 or 70. I think that's definitely possible. Either way, even if we do have this 20 to 30% route, your 12K and 9K predictions are still out the window because we're still way, way above where we were last year at this time. We've just grown too much for us to go down to that price. And I still have a lot of doubts that this washout will actually happen. They're thinking that banks will actually be in trouble again. My guess is that for banks, they'll probably consolidate into bigger entities or be bought out by the bigger banks, as has been happening. And I don't think they'll really be in that much trouble. Obviously, some people believe the ETF isn't going to happen until March, until after this happens, because a 20 to 30% plunge would obviously give banks and other big funds an easy buy-in at a much, much lower price. But see, the thing is with the ETF, these funds and like BlackRock, they're actually not buying Bitcoin for themselves. They're holding it for customers. So it doesn't actually matter what price they actually buy in at. If Bitcoin's at $35,000, like someone else is literally giving them $35,000 to buy a Bitcoin. If they're buying Bitcoin if Bitcoin's at 20K, someone is literally giving them 20K to buy Bitcoin with. But Arthur Hayes is really looking at the risks for the US banks and markets, and it could potentially collide in March. Obviously, nothing is 100%. I think this only has a small chance of happening. But if you're hoping for lower prices, this is probably one of your last gasps before an all-time high. And I don't really see us going below 35K, even if this actually happens. And this is because of a drawdown in the Fed's reverse repo program. So the thing is, like, the balance is quickly draining, and it's already 700 billion, where it was 2.5 trillion at the end of 2022, and it's going to be about 200 billion by March. So banks are actually losing kind of a lifeline, and that's kind of like why he's actually predicting that there could be a washout and a major drop in the entire market and crypto altogether. Although I think crypto will fare better than the overall market and will rebound much, much more strongly than the overall market. There's going to be a 30%. There's going to be a quantum breakthrough at Harvard. Actually, there was a quantum breakthrough at Harvard, and now it's gotten onto DARPA. DARPA is the kind of like the military branch research thing. And could it actually threaten crypto? My answer is probably no, but it's interesting to actually read about. A team of Harvard scientists working on a project funded by Defense Advanced Research Projects Array, or DARPA, has announced a significant breakthrough in the field of quantum computing. Now, they're afraid that quantum computing would actually crack the code and make Bitcoin useless. This is probably what Craig Wright is waiting for because he wants to prove to everyone that he's Satoshi Nakamoto. And no matter what happens in court, I don't think the people in crypto are going to consider him Satoshi Nakamoto unless he can move coins from the initial Bitcoin wallet or the Genesis wallet. And the only way he gets that is by cracking the code. While he's probably not going to be able to crack it unless he gets his hands on some of this quantum computing. So this is from researchers working with the noisy intermediate scale quantum computer, say they have created the world's first quantum circuit using logical quantum bits, or qubits. The innovation marks a significant stride towards fault-tolerant quantum computing, promising to revolutionize the design of quantum computer processors. And I suppose, if this comes out into production for general purpose, it definitely can impact crypto. Remember, quantum computing can only concentrate on specific tasks. Maybe this will actually allow it to concentrate on for general tasks, and that could actually be this could definitely be a tipping point for crypto. But I do believe they are several years away from even really mass producing this for the everyday use. So the optimization with noisy intermediate scale quantum devices program aims to exploit quantum information processing before fully fault-tolerant quantum computers are realized. This effort will pursue a hybrid concept and combines intermediate-sized quantum devices with classical systems to solve particularly challenging set of problems known as combinatorial optimization. So I don't know if that has anything to do with crypto, and I think any assertions that crypto is going to be destroyed by quantum computers is way, way too early. As like I said, I don't think this set of problems specifically applies to crypto, and you do have to program quantum computers to solve a specific set of problems. Of course, this is a collaboration between Harvard, MIT, Q-Era Computing, Caltech, and Princeton. And in their research, the ONSEC team focused on Rydberg qubits, a type of physical non-logical qubits. Through this effort, they successfully developed techniques to create error-correcting logical qubits from these noisy Rydberg qubits. So I'm not really sure what that actually means. I'm not an expert on quantum computing or advanced mathematics or any of that stuff. Definitely not that technologically into it, but pretty exciting. And maybe we should keep track of quantum computing, but I think it's going to be several years if they ever really try to crack crypto with quantum computing, because for most things, traditional computers are still faster, but for quantum-specific problems, quantum computers are definitely much faster. And it's also been reported that BlackRock, the cabal, has about $2 billion lined up for the first week of Bitcoin ETFs, which is supposed to be next week. Yes, I know there was a rumor yesterday, a big rumor yesterday indeed, that Bitcoin ETF would be approved today. That journalist was lying. She does not have inside information. But most of the big analysts like Eric Balchunas, James Seifert, and others were always pointing towards Wednesday. They did not actually believe the rumor for yesterday. But I got to report all the rumors that actually come out that could actually have consequential effects on the price. But they're still very much looking forward to Wednesday. And now, there's more reports coming out that BlackRock has $1.5 billion they're ready to launch in the first week. Now, $1.5 billion, whether they buy OTC or buy off the exchange, and by the way, it's probably going to be OTC, it will affect the price. Because remember, OTC price cannot be lower than, cannot be higher than exchange price, because then everyone will just buy off the exchange. So if you're slowly buying up the OTC, that will dry up the OTC, and that will make people go to the exchange for Bitcoin. So that will help Bitcoin price. I've said this multiple times. People still believe in buy the rumor, sell the news for Bitcoin ETFs. It may not play out that way for ETFs because ETFs do force these big institutions to actually buy Bitcoin. And it really doesn't matter if they're buying from the exchanges or buying ETF. Eventually, it will affect the price. And if they have several $1 billion in buys, it's going to affect the price really fast. Remember, it does not take $1 to raise the price of Bitcoin $1. Once you get past a couple of resistances, I don't think any of the resistances are $10 billion or anything. We're in price discovery mode where $1 can move the price up $10, $15, $20. So the thing is, it's a big ratio once you get past some of the resistances, and it doesn't take a huge amount of money to get past some of the resistances because there's not as much money and liquidity in the crypto market as there is in traditional markets. So the $1.5 billion definitely could pump us up by itself, but with other funds coming in like ARK, Franklin Templeton, Fidelity, and others, we can see it go way, way, way up, much higher than most people have actually anticipated for this. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.